Financial on the 5 now. The stock market saw its biggest drop since May. Worries include China's property market and expectations the Federal Reserve will pull back support from markets and the economy this week. So for more on what's going on, Tom Gimbel, the CEO and founder of the LaSalle Network, is joining us with a little bit of perspective. Tom, great to see you. So some have pointed here to this Chinese real estate conglomerate and its $300 billion debt crisis. Tell us how that's affecting the markets.
Well, if it were in America, people would be like, obviously, this makes sense. It would almost be like 2008, too big to fail. What we're seeing now is it happening in China, in the largest publicly traded REIT that exists in Asia. And if that's going to happen, the ripple effects that go throughout the world because of China being the fastest growing economy in the world, that it's going to trickle back to America. And that's why, I mean, the Dow Jones was down almost 2% today, over 600 points. That's a big drop. And that's going to, the question is, will it be the beginning of a sell-off in America, which usually happens in October. I mean, October historically is a big sell-off as a lot of retail investors and institutional want to take their profits before the end of the year and see what happens.
So when China sneezes, the whole world gets a cold and kind of vice versa here. You mentioned 2008. This happens on the 13th anniversary of Lehman Brothers collapsing. Do you think that, as you kind of alluded to, that this could be the start of something here, you know, going forward?
Yeah, I don't really think there's any parallels between Lehman Brothers. What you have with Lehman Brothers was you had the mortgage crisis and you had credit default. What you have here is the loans on real estate being owed on $300 billion worth of debt. The real estate's still there, and the company still has that as collateral. And everyone understands that real estate is a material, actual asset that exists. So I don't think there's going to be the same ripple effects that you have from a trading or an investment finance firm like Lehman Brothers 13 years ago. So this seems to be something that, while not good, isn't going to have ripple effects beyond what we're seeing right now. That there may be, the Dow may dip a little bit. We'll see some companies like Caterpillar and others that do a lot of business in that part of the world that have a little bit of a dip. But long term for the United States economy and the stock market, I don't see this being a crushing blow by any stretch of the imagination.
Well, it comes at a time where the markets have been rallying for a long time. Is this part of that normal course correction that you indicated seems to happen in the fall?
Yeah, it really is. We're going to see this happen no matter what. And there's still a lot of companies in America, a lot of publicly traded companies, a lot of tech companies that aren't dependent on China. The interesting thing that I saw today is that airlines rose today. So that airlines and pharmaceuticals continued to grow, even though the Dow had this big sell-off. And what we saw is energy stocks took a bigger hit than other stocks right now. So I think we're seeing the market have really a traditional flow that happens at this time. It's not even near a course correction. None of the experts are saying that now's the time to start buying based on a sell-off. And what we're seeing with our clients and talking to so many CEOs today on the jobs front, that they're not worried one bit about hiring. There's still a demand for labor like they've never seen, and nothing that's happening in China is affecting that in America right now.
You know, I had a feeling that the answer to this would be yes, Ray. What are we supposed to do in these situations as investors? Just sit tight? That's usually the advice that we get in these moments.
That's exactly right. I think if you talk to, I was talking to my friend Patrick over at William Blair today, and he said, listen, you don't go and sell and get crazy. You manage your emotions. You realize you're in a long game and things will be okay. And I think that's exactly what people should be doing, whether it's their 401k or whether they're a day trader, is right now, don't panic. This is not the end of the world. It's a normal seasonal issue dealing with stocks and investing.
Tom Gimbel at the LaSalle Network. Thanks a lot, and we'll see you next Monday. Have a good one.
Talk to you. Be safe, Frank.
You too.